Welcome, everyone. My name is Jo Reynolds, and I'm part of the team at Social Innovation Canada. I'm stepping in for my colleague Muska, who is our Director of Programming for this session while she is away, and it's my absolute pleasure to be here and to welcome you to our second Investment Readiness webinar. We'll start this event in a few moments, but before we begin, I'd like to bring us together around this virtual table in a land acknowledgement. Today, we are coming together as a community, and we're gathering in this digital realm from many individual spaces across the country. So together, we'd like to acknowledge that the land on which SI Canada is home-based is located in the traditional territory of the Huron-Wendat, the Haudenosaunee, the Seneca, and the Mississaugas of the Credit First Nations. Today, I am joining you from the city of Kingston, which is known as the Mississauga Anishinaabe Original Peoples as the Michi-Saugig-Nishnabeg territory. It's also referred to as the Northern Iroquois by the Huron and Haudenosaunee. So Chi Miigwech and Nia Wenkoa, which is thank you to the Mississauga, Huron-Wendat, Haudenosaunee peoples who continue to share their histories with us, cultures, knowledge, ways of diplomacy, economies, and worldviews. As we think about social innovation and social finance, we often have conversations about creating a shared vision for a sustainable and just future. And I invite you as well to take into consideration a reflection on the past and the present to consider how we can strive towards inclusive and resilient communities that incorporate the many ways of knowing and being in relation with the land and its First Peoples. Thank you. Today, we're excited to highlight Windmill Microlending's investment-ready journey, from the challenges to the opportunities, how they overcome barriers to accessing impact investment, practical takeaways and lessons learned, and incorporating and ways in which they've incorporated some diversity and inclusion in their practice. The webinar is part of our investment readiness programming in partnership with Employment and Social Development Canada. The goal of the program is to grow and strengthen the social innovation and social finance ecosystem by providing information, opportunities, resources, and connections that will help social purpose organizations become investment ready. So you can stay tuned for more of these webinars. You can also sign up for our social finance newsletter to receive up-to-date information. It's actually an excellent newsletter. I really enjoy reading it myself. In terms of the overall flow of today's event, we'll start with a brief presentation by Claudia, the CEO of Windmill Microlending. Following the presentation, there will be an engaging panel discussion with important highlights and insights and perspectives from some wonderful speakers that you'll be introduced to. We'll have an audience Q&A segment at the end of the panel, so we encourage you to have your questions ready for the speakers, and please use the raise hand icon, which is located at the bottom of the screen under the reactions tab during the Q&A segment if you'd like to participate. Following the Q&A, there'll be informal networking sessions, so we encourage you to stick around for that. There'll be an opportunity for you to meet and greet with some of the speakers and other attendees, and we'll provide instructions for that after the Q&A session. So just some additional quick housekeeping notes. We have live French language closed captioning available. For those of you who are looking to have this feature visible on your end, you can select Show Captions on your screen and click the Up Correct button to select Translate To and choose your desired language from the drop-down menu. These instructions will also be shared in the chat by my colleague Kathleen in just a moment if she's just doing it. As a reminder, this session is being recorded, and if you experience any technical difficulties, please reach out to my colleagues, Alex, Kathleen, and Crystal, using the chat feature, and they'll be able to assist you. So thanks for listening, and without further ado, I'd like to pass the mic or the baton over to you, Andrea. Andrea Nempton is our CEO of SI Canada, and she'll say a few words before we get started with the presentation from Windmill.
Hi, everyone. Thank you all for coming. Welcome to this virtual space. I'm actually connecting in today from Ottawa, the unceded Anishinaabe Algonquin territory, still home to many nations, and actually also the highest population of Inuit people in the south live in Ottawa, I found interesting. We're so pleased to be presenting this social finance is the fuel for social innovation. It's such an important aspect of actually creating the changes, the social and environmental changes we all need to see. And Windmill has got a special place in my heart because it was one of the first actual investments I think Kelly Gauthier helped me with when I was at Inspirit, and we did a loan guarantee when it was still the Immigrant Access Fund, and we just looked at the kind of impact that it was having. That's such a simple and smart idea that was creating such incredible impact. And it's been really rewarding to watch Claudia and her team sort of take it to new heights. Now, one thing that really stands out to me is that, you know, one of the things that you've proven is that folks will accept a lower return for huge impact, and people will be willing to invest for, you know, a small or even no return for a project that is creating such incredible change in the world for individuals. So that's all I'm going to say, because actually you've got such an incredible, I'm really excited to see the presentation and see where Windmill's at right now. And then you've got this remarkable group of panelists that bring so much knowledge to the table. This space of impact investing has changed so much over the last decade, and what you have today are the folks that have been really driving that change. And so enjoy, and thank you for coming, and reach out, and I'll hand it over to you, Claudia, to share your work with this apt audience.
Great. Thank you so much, Andrea. And it's just such a pleasure to be here on your on this webinar with you and so many of the people that have made this investment journey one that's been so rewarding and successful. So we really appreciate that. So I'm really excited to have a chance to talk about this, because this is, we talk about a lot of things at Windmill, but the investment readiness journey is not something that people ask about every day. So this is a really fun conversation, and an important one to be having. So for those of you who aren't familiar with Windmill, we are a charity that empowers skilled immigrants to achieve prosperity through affordable loans and supports. I'm just going to check, everybody see my slide deck? Is that up? Great. And I'm just going to show you a little 23-second video of one of our clients' journeys to get you in the mood for what we do. So that in a nutshell is what we do. We take skilled people who've come to Canada with their amazing skills, but unfortunately get stuck in survival jobs, doing things that are way beneath what they should be doing to support other Canadians. And we help them get back to what they want to be doing and should be doing. So the reason that we exist is because Canada is a country of immigrants, as has already been said. We bring in hundreds of thousands a year. We identify ourselves as a country that supports immigrants. But unfortunately, we don't do as good a job at that as we tend to think we do. And a couple of years ago, RBC did a study to try and quantify how much we're losing each year because we are not capturing the skills of our immigrants. And they estimated that we're losing about $20 billion a year due to the untapped potential of our immigrant population. Just this year, in fact, we've seen a poll that's come out where the survey was done of 18 to 24-year-olds who have immigrated to Canada. And unfortunately, 30% said they're likely to move to another country in the next 2 years. And that's something we've got to stop. And we hope that our offering is going to help do that, and help keep the people that have come to Canada who have the most potential to contribute doing good things here. So what we do is we offer loans of up to $15,000 and wraparound supports that enable immigrants to triple their incomes and put their skills to work in Canada. Our loan purposes are credential recognition, career change loans. We offer professional development loans and resettlement loans. And the wraparound supports are getting more numerous every couple of months. We're adding more wraparound supports, but the fundamental three are financial literacy training, career assessment coaching, and mentorship. We've recently piloted a job board. We have online career support resource library, and a number of other pieces that we're working on. Our clients are all across different professions where there are labor market shortages in Canada. More than 50% are in healthcare professions. We got a lot in engineering and IT, and you can see the breakdown of other careers. But basically, we don't restrict our loans to any particular field or fields. We're very proud of the fact that almost all our clients give us a 5-star Google rating, and we measure that and report that to our investors. And we also measure our net promoter score. So we ask all our clients how likely they are to recommend Windmill to a friend or family member. And those are incredibly high scores as well. And the most tangible metric that I think our investors care about is the income growth. So our average client has an income of less than $16,000 when they come to Windmill. Many have no income, which is what brings that average way down. And 3 or 4 years later, when they've completed their loan and their learning plan and have got a new job, their incomes have tripled or more. For some professions like engineering and physicians, if they're successful with their learning plans, their incomes go up by 10 or 11 times. For some other professions like nurses, it may be a little bit less because they have higher levels of income before they get reaccredited. But we see this as, one of the major reasons we're successful. And a final thing I'd just like to touch on with Windmill is our commitment to diversity, equity, inclusion, and unity, or what we call internally with our staff as our One Heart policy and One Heart programming. So we are very focused on hiring immigrants because we believe that being close to the lived experience of our clients and having the staff that support our clients come from a place of empathy and understanding is very important. So more than 50% of our staff are BIPOC. The strong majority of our staff are immigrants themselves, and an overwhelming majority are the children of immigrants if they are not immigrants themselves. Over 25 languages are spoken by our 40 team members, and 69% of our staff are women. And we're also committed to the federal government's 50-30 challenge, which is to see 50% of board seats and senior leadership team members women, and 30% from other underrepresented groups. And that's something that we are committed to trying to maintain. So our loan growth. So this organization was founded in about 2005, and they did about 5 loans that year. Windmill grew slowly over the first decade. And by 2015-16, we were doing about 400 loans a year. I was hired in 2016-2017 and decided with the board that we wanted to have a goal of growing the organization from 400 to 4,000 new loans a year. So this all sounds great when we've got such a big immigrant population, but the big challenge was, how are we going to finance that? That's a lot of and that means more than 10 times the amount of loan capital, because we actually have increased our loan cap over this period. So how do we raise the loan capital? Well, when I started with the organization, this is what our loan capital composition looked like. We had, as Andrea mentioned, we had some guarantors who guaranteed a line of credit. That's the amount in red. The line of credit, I was told at the time, was up to $6 million, and we were using about $1.5 million to $2 million, depending on the month, on that line of credit. And then we'd been given a block of funding from the federal government, but there was almost no private sector support in terms of donations to that loan capital pool. So I started in my first year. You can see that first year, the green line going up as I started reaching out to the private sector. And as won't surprise you, Windmill's mission really had resonance with the private sector, philanthropists and corporate donors. And we were successful in growing our donated loan capital a little bit, but you can see that's pretty slow growth. And I wasn't satisfied that we were going to be able to grow 10 times by just growing our donations and relying on that line of credit. So I was very happy to take a call from Adam Spence at the Social Venture Exchange at Mars one day in June 2017. He said, Claudia, would you ever be interested in developing for Windmill a social impact investment product? And I was like, well, tell me about that, Adam. I have no idea if that's possible, but I'm all ears. And so we talked about this and thought, well, maybe we could, he said, maybe we could find social impact minded investors and we could create a fixed income product that we could borrow and you could increase your loan capital pool. And I said, well, the problem is our line of credit we borrow at prime. And I don't know that anybody is going to want to invest in a bond that with a little charity that is less than prime, but it's got to be less than prime. I'm not willing to offer prime because we've already got this line of credit. So it has to be cheaper than prime. So we worked on this, and this is why we thought, well, maybe this will work to start this community bond. Why? Because we've got a 12-year track record of success, and people like investing in things that have a stable, long track record, and we do have that. And we have this really impressive client impact of alleviating prosperity, tripling people's income, and that's obviously something that's got to be attractive to somebody. And something that is quite rare in the charitable sector, we have this model where a revolving pool of capital would be helpful and could be repaid. So it was actually possible for us to think about that we could borrow the money and then repay it one day. So those are what made us optimistic, but there were good reasons to think that this wouldn't work. One being that only Andrea, I think, had heard of Windmill. And so we had a real brand recognition problem back in those days. We also were could offer a very low financial return for investors. And there was that, therefore, and social impact investment was not as cool as it is now. So we thought there was a very small market of potential investors. My husband is a really nice guy, and he's a traditional, finance guy. And when I told him about this idea, he was like, Claudia, you're crazy if you think this is going to fly. He's like, no investor in their right mind would invest in your Windmill bond. Let me just tell you straight. So fortunately, my husband is used to being married to somebody who doesn't always listen to what he says. And so I said, well, why don't we just try this anyway, even if Graham doesn't like the idea? So this was our timeline. In June, we researched and designed and created the prototype for the community bond with the Social Venture Exchange. We launched it in November of that year. We had our first closing in March of 2018. And then we started, bringing in the investments. I think we had about 5 investors invest at the start. And then every couple of months, we had more people that were interested. It was a landmark day for us in October 2019, when my dear colleague, Sarah Stewie, went out to the Hamilton Community Foundation and came back with $1 million investment. That was the biggest investment we'd ever dreamed of having. So that was very exciting for us and really made us feel like we'd arrived with this. And then another great day for us was when the Chagnon Foundation was indicated they were interested. And then after a lot of very serious due diligence, again, we felt like we were really being put through our paces by the Chagnon Foundation, but they honored us with a $5 million investment just this past spring. This summer, we reviewed and refreshed our community bond interest rate policy. And at this point, we've raised close to $19 million through the community bond. And counting. So you can see, this is what I showed you our loan portfolio composition back in 2016, 2017, and when it was all green and red. And you can see how it's developed in the 5 years since. And that's very exciting. And you can see that there's no way we would have managed to grow our client numbers without the community bond. It has been absolutely critical. That's where we have increased our donations. We do make use of our line of credit, but really the vast majority of our loan portfolio is thanks to the investors that are investing in our community bond. And so this is us looking forward to, about 4 years out, and where we imagine our loan portfolio growing, where we'd love to see it get to if we're going to hit that 4,000 new clients a year number. This would be growing from, currently our loan book is about 28 million, and this is growing it to about 70 million. just over 70 million. And we see 2/3 of the money that we raise each year for loan capital as coming from community bonds, and 1/3 each year we need to bring in from donations. So we see our donations as allowing us to lever our capital base with the community bond. And so just coming to the end here, this is what the terms of our bond currently. We offer 1, 3, and 5-year terms, and with a 5-year rate at 3.75%. And those are pegged at RBC's comparable GIC rate, GICs less 50 basis points in each case. And so just to close with the lessons learned, one is referrals from other investors are a key way we've grown the community bond program. And Spirit shared their due diligence with that they did at the beginning with any other interested impact investors. And that made it a lot easier to get those first early adopters of the product, which was absolutely critical. 2, there's a growing pool of investors that care more about strong, replicable social impact than they do about financial returns. So Adam Spence at SVX was right. My husband was wrong. And that's very exciting, I think, for everybody who's on this webinar to see. 3rd, professional documentation and good data room that's easy to access, and clear communication channels are important for building credibility and long-term relationships. It's really important for charities that are looking for investment funds from investors to show that they are professionally run and well managed. And having these documents is, I believe, critical to building that confidence from investors. And finally, the icing on the cake in all this is that if you're doing this kind of work and you're a charity, some of your investors may become donors. We didn't anticipate that, but it has been a wonderful, wonderful surprise, and something, again, that traditional finance guys don't anticipate what happening, but can happen if you're doing this wonderful kind of work. So finally, the most important thing to impact investors, I think, is this chart that shows that our clients' incomes grow by 3.5 times, unemployment drops from 41% to 8%, and our repayment rate is above 97%. So with that, I will stop sharing my screen and turn it over to my dear colleague, Sarah Stewie.
Thank you so much for that presentation, Claudia. That was such a great walk down memory lane for me. Remembering going up to Hamilton, doing my first presentation to Annette. So much fun. So my name's Sarah Stewie, and I'm the Associate Director of Philanthropy at Windmill Microlending. And in my role at Windmill, I work with donors and investors who want to achieve a strong social return on their donation or investment. And one of my favorite things about my job is all of the intelligent and passionate and fun folks I get to work with, including all of our wonderful panel members today who I've been lucky to work closely with over the years. And usually when I meet with them, they're the ones asking the questions. So it's a fun opportunity for me to turn the tables on them today. But first, I'll briefly introduce them before hammering them with incredibly difficult questions. Annette Aquin. So Annette Aquin is the Executive Vice President of Finance and Operations of the Hamilton Community Foundation. Annette oversees the organization's finance, investment, and administrative activities. And she's been instrumental in the Hamilton Community Foundation's pivotal role as a social finance market builder, focusing on the goal of aligning all of Hamilton Community Foundation's assets with its mission. Nathan Cohen-Fournier is the social finance lead for the Fondation Lucie et André Chagnon. The Fondation aims to deploy 10% of its capital in mission-based investments in line with poverty prevention in Quebec. Prior to joining the Fondation, Nathan was based in Kuujjuaq and acted as head of economic development for Makivik Corporation. Kelly Gauthier is the president of Rally Assets. As president, Kelly runs Rally. She's responsible for Rally's day-to-day operations and client relationships. She leads the team and manages the business to enable Rally to grow. And she's worked with clients for over 2 decades to create impactful portfolios. And last but not least, we have MJ Singha. MJ is a social entrepreneur, operator, and an investor. He's helped build multi-million-dollar microloan portfolio in rural India and helped create a cooperative that served over 200 entrepreneurs. And for the last few years, MJ has worked in impact and responsible investing. He sits on a number of boards, including the Hedderly Foundation, Philanthropic Foundations Canada, and Tapestry Capital. And Claudia is also joining, Claudia Hepburn is also joining the panel today. Well, thank you so much, everybody, for being here today. So first, I'll start off with asking a question for MJ and Annette. How did you first learn about Windmill, MJ?
First, thank you to SI Canada for the opportunity, and to Windmill, great presentation, and to everyone who's participating. So I actually started my career in corporate side and did microfinance, 12 years back in rural India. And I could see, $2 million loan fund, 1,000 loans, $100 to $1,000 each. And I had candidly no idea what I was doing, but it kind of worked out. And I saw the power of access to opportunity. Which country or which family we're born in is luck. And that determines a lot of our life trajectory. And a lot of people just want an opportunity, not necessarily charity, a hand up than a hand out. And so I had seen that firsthand. And so it was at the launch of the VCIB, Vancity Community Investment Bank in Toronto, that I was introduced to Claudia, and we ended up chatting a lot about microloans. And then she mentioned to me that, oh, well, by the way, I'm the CEO of it, Immigrant Access Fund back then. So I was passionate as a, new financially privileged, but an immigrant to Canada. I could relate to a lot of the struggles. And I had experience in microfinance firsthand and microloans and the power they had. And we stayed in touch. I ended up having the privilege of, through my various, CFO and advisory roles, working with Windmill and getting to support all the great work you folks do. And excited to be here today.
Thanks, MJ. Annette, how did you first learn about Windmill Microlending?
Yeah, well, so the Hamilton Community Foundation had been engaged in the impact investing space at that point already about 8 or 9 years. And so we had the good fortune of having a fairly strong network of people already in the social finance space. So we, above all else, we had we still have the amazing privilege of having Bill Young, who many people will know as kind of I call him the puppet master of social finance because he seems to be connected to everything that we've ever worked on in social finance. Bill's the donor advisor for his mother's fund at the Hamilton Community Foundation, which is the largest fund was the largest fund. We received the largest gift in Canadian history back in 2000 from Bill's mother. So Bill has been really instrumental in helping us link up with various social enterprises, and frequently, and in this case, this was the case, through his fund at the foundation, he had been granting just at the startup level of Windmill. So there was already a history of granting with Bill, and of course, so as a result, we got insights directly into Windmill, even through our granting stream. So that was really helpful. And then certainly when Sarah came, we joked about the fact that when Sarah came and did the pitch and how clear the pitch was to us, that our committee was basically, she could barely finish the presentation and they were ready to go. The kind of the high level alignment, how clear the alignment was, made it for us an opportunity that we were incredibly excited about and continue to be.
Well, I remember at the end of the presentation, the first thing your CEO, Terry Cook, said was, he turned to everybody and said, I don't know why we wouldn't invest. And in my head, I just remember thinking, thank you, Terry. So sure. That was great. Kelly, thank you so much for joining the call today. How does Rally work with potential investees like Windmill?
Yeah, thanks for having me. Nice to be here with so many friends. So for folks that aren't familiar with Rally, we are an impact investing advisor and asset manager, which means that we work for investors, whether those are foundations, private investors, family offices, folks that are looking to direct more of their capital towards impact. And as everybody around this table and probably most folks on the call know, this is not a direct transactional market yet. So there is no, TSX for impact investing yet. It is hard to always find these investments. And really that's Rally's mission, is to help connect those investors with intention to the best opportunities in the market. And so as Andrea hinted in the opening, my windmill origin story goes way, way, way back. It predates Claudia even. And so I love to see these amazing ideas pivot into things that I can connect our investor community to. And so when we're out there looking for investment ideas, they may come at all stages of maturity. They might be in the earliest ideation or coming out of a charitable model. And really what I'm always looking for and hopeful is how we can connect investment capital to that. But more broadly, as Annette said, we work across the spectrum, have longstanding networks and relationships to help make sure that we have a good view on what opportunities are available across the country and globally, so that we can help match up that capital and supply and demand sides.
And Nathan, thank you so much for joining. From a Quebec perspective, how do you find potential investees for the Chagnon Foundation?
Merci Sarah. Je veux juste dire bonjour à tout le monde. Donc Nathan Cohen-Fournier. Je vais parler en anglais pour le panel, mais n'hésitez pas à me poser des questions en français aussi. So it's a real pleasure to be here with you all today. And as part of the Fondation Lucie-André Chagnon, we're really in a process. I think this is a journey for all of us in terms of how we build more coherence between the way we invest our money, and that's as foundations, but also as a society and collectively, and the way that we give, and the way that we try to improve inclusion, we improve lives of people who are vulnerable or put in vulnerable situations. So I think this is really social finance as we're all here because we believe in the promise that it holds. And for us, in terms of working with potential investees, I think what's really important is how do we put trust and building relationships at the heart of it. We're dealing with individuals with their stories. I think, here at Windmill, we could recognize really clearly the strength and the power of the story. And so that's the story of individuals and people coming together to create solutions and to create, different initiatives. As Kelly said, different partners will have very different levels of maturity and different in social finance. I like to use the term absorptive capacity. So what's the level at which different initiatives can absorb financial capital that they'll have to reimburse eventually with the return. And so you can have partners like Windmill that already have a structure put in place when we arrived at least, and other partners that are really just trying to figure out how that can work with their model. So I think working with potential investees, it can take 3 months or it can take 3 years. It really depends on that level of maturity. And so we work with them to structure those tools and to think about how they can be relevant for their mission. And sometimes it doesn't work out, and that's okay. But I think that's really around the relationships that we can build. So, yeah.
Thank you. So for MJ and Nathan, MJ starting, what are the most important factors that you think about when deciding to invest in an organization?
Right. Thank you for the question. So I would say the first part becomes, the impact analysis, impact both from, the standpoint of, absolute impact of what someone is doing, but also impact in the context of who the investor is. So in one of my roles, it was the money of a Catholic missionary whose roots were supporting immigrants 100 years back. So that's how another one was a community foundation in Kitchener-Waterloo. So Kitchener-Waterloo cared about all immigrants in that area and, the sisters' money. So that's what I feel like there is an absolute impact and impact in the context of the investor. And then, if that makes sense, then we start looking at more on the financial and investment side. Because, as Kelly said, Nathan said, folks are at different places in the spectrum, but how suited or not is it in context of that investor? Is it something where you need support to provide grant financing to build up capacity, or is it actually investment ready, a model like Windmill had? And then what are the returns, risks, term, those kind of operational things to ensure that this does align. A lot of investment committees are made up of at both at foundations and others, like a mix of social finance and traditional finance experience. So you have to figure out, what speaks to that audience and ensure that I am of the school of thought that low return is still a return and it fits in a part of the investment portfolio. So how do you ensure that you're allowing folks to do the fiduciary duty? So that's where the financial analysis of the background and cash reserve, things like that, as well investment structure comes in. And then the last one piece would be the market, so to say, market and the business model. Is it speaks to the first part, is it tangible, is it doable, what's the scalability, do those assumptions make sense? And I would say the final and, in my view, the most important piece that I have learned is at the end it's about people. People put ideas, and I get to work with Annette on a bunch of projects, and we talk about at the end it's about people, and with people's credibility, their experience, their potential. Windmill's whole work is about potential. So all of that coming together, that will they pull it off? And operationally, I would say it's the management and team, and having a board and committees or whatever the governance is that is willing to dabble. As Claudia said, that this space is a bit tricky, right? Because folks are like, oh, maximize the return and then give away money. But this is something in between. So I would say that's the approach: impact, financial and investment, the market and business model, so to say, and then the team and the board. So that's would be our approach. And also trying to meet people, understand that this is an evolving space. So not all the boxes they'll check off, and you have to kind of different times meet people where they're at and figure out, if it makes or doesn't make sense for you.
Nathan, are there any key differences to how you approach investment decisions at the Chaniel Foundation?
Yeah, I think MJ really did a good sum up, but for us at the foundation, being a foundation that has a geographical, focus with our mission, definitely, how we see the initiatives of the projects impact specifically to Quebec is important. And whether or not the initiatives are pan-Canadian, North American, or even Quebec-based will be really key. And we always start, before going into the financial details, we always start validating the links with the mission. That's always going to be the first thing we look at. And how do we do that? Well, in French, we have this word, which is ancrage communautaire. So it's going to be the level of depth of partnership and community buy-in. And so what's great working at foundation, we can bring in, the expertise that we have from our granting side and who's within ecosystems such as migration or refugees, or working towards diversity and inclusion, or working with, different nonprofits. So to see how they can imagine such an initiative fit in within the current ecosystem. So that's really kind of the first core of doing our process. And then it's also going to be a matter of track record. So, what's the initiative's track record? And when I mean track record, we always initially think about financial track record, but there's also, the social track record. How do people talk about this actor in the field? Who are they linked with? Who are their partners? What are the initiatives that they've done in the past? And so looking at all of that, and really doing that process, and as MJ mentioned, and as I mentioned before, it's a relational process. So you're trying to build a trust or a relationship with the potential investee. And so you're also analyzing or looking at the team and the individuals that are behind those projects. And I think any investor will agree with that's probably, at least a number 1 or 2 or 3 in what you're going to be looking at. So I think those are some of the main things we'll look at. And then all the financial things, I think that's more straightforward. It's got to be a sound project that can show how it's going to generate enough revenue to repay, whatever capital they're borrowing. And we have a lot of tools that can help do that. So, yeah.
Thank you. And Kelly, what does the due diligence process look like for Rally assets?
Yeah, I think between MJ and Nathan, they've covered sort of the big buckets really well. You know, our process is impact led as well. I think what is probably most material for the audience is thinking about what does that look like for different investors, because different investors have really different obligations and interest in examining different things at different depths. And so, and certainly the folks at Windmill have seen this firsthand, and all first-time fund managers go through this roller coaster of, you know, different diligence experiences where they'll meet one investor who will have, you know, a lovely, compelling conversation with Claudia and love the mission and love the story and say, here's my check. And then the next person will take 2 years of asking a gazillion questions, you know, to fill out their DDQ. And so that's okay. That talks to, you know, what Nathan's saying around it being heart-led. And I think all investors want to come from that place, but their fiduciary requirements, depending on the type of investor they are and the seat that they sit in, differ. And so certainly Rally being a regulated entity, we aspire to not be the 2-year process, but we're certainly not the one conversation process either. And so we want to make sure that we are meeting the OSC and other provincial regulators' standards for going through, you know, an institutional diligence process that is rigorous and that allows investors to feel confident in terms of the decisions they're making. And that doesn't mean that it's not, you know, impact first or heart-led. I love that expression, Nathan. But it does mean that for our clients and the type of clients that, you know, our mission and what we're trying to do is to bring more of those institutional skeptical investors to the table. Because to Claudia's point, it can't all be, you know, the one conversation, yes, I'm in type folks. We need more money at the table, and it needs to come from more institutional sources. And so we're like the slice that Rally sits in, we're trying to bridge that gap to say we can do the full institutional process, and we can bring those folks in a way that feels exciting and that feels safe and confident from an investor perspective.
And Claudia, from Windmill's perspective, how could the due diligence process be improved? You're on mute.
Thank you. Sorry about that. Yeah, I think that, you know, Kelly put it really well with that some people just have different processes, and I think that's inevitable. One thing that the Inspirit Foundation did when we first got started that was incredibly helpful was they created an investment memorandum on Windmill, and they shared it widely with other potential social impact investors and encouraged us to share it with people that we were courting for the investment process. So I know that that's not possible for every investor or fund, and that's totally understandable. But if anybody that can share, that's super helpful for investees and potential investors, and it also gives the people a lot of trust when they know that somebody that knows what they're doing in this process has gone through that kind of rigor. So that's super helpful. And the other thing is, I think if you're an investor asking questions, if you can let the investee know, there's a power differential there between, and if you can let the investee know, these are the questions that I care most about, and you absolutely have to answer these well to get me to invest. And here are some nice to haves, but let me know how much work is going to be involved in these nice to have ones, because it may be that you're asking questions that are just seem interesting, but you don't realize that it's going to cost a lot of time and effort from a charity that is probably pretty strapped for resources. So just being clear with one another about how much time it takes, I think can be helpful. But Sarah, you've been through this more than anyone here from the investee side. Maybe you want to weigh in on that one too. What's something that you would recommend?
Well, one thing that I would recommend to investees, I mean, I think you absolutely need to have, you know, your financials in order and all of the, you know, baseline requirements, but don't be afraid to say no or to negotiate or to say, I don't have that. Can I provide something else? It's, you know, a two-way street relationship, and I've said no to things and we've still received the investment. So don't be afraid to negotiate either, I think is important. So Claudia talked a bit about the 50-30 challenge and how Windmill incorporates DEI. Annette and Kelly, I'd love to hear from your perspective. how does diversity and inclusion factor into your investment decisions, and what metrics are you looking for? Let's start with you, Annette.
Yeah, and it's so great that we have Kelly here, because Kelly and Rally Assets have been working on a co-created kind of impact matters report for our impact investing, both kind of our private impact investing and our public market work. And one of the things that I think is unique about the work that Rally has been undertaking on our behalf is not just to look at our impact investments and how they line up with the SDGs. And obviously a number of the SDGs speak to the issues of diversity and inclusion, but also to look at the operations of the organizations that we're investing in, particularly around their diversity, equity, and inclusion across not just their management, but across their staffing and across their board, to help us start to benchmark where those organizations are, and then be able to ask questions about what their plans are to kind of increase or improve in their diversity, equity, and inclusion part of their business. And so certainly that's one of the things that we're focusing on and continuing to embed in our impact investment strategy. And I don't know, Kelly, do you want to talk about that a bit?
Sure. Yeah, and I think so. So from Rally's perspective, I would disaggregate it a little. There's what does Rally think is important, but Rally's acting on behalf of our investors. So there's also what our investors think is important. So Rally can embed some of that at the Rally level of our process. And then there's some nuance in terms of different investors and what's most important to them. So at a baseline, we look at DEI across every single investment, whether that is our investors' perspective and whether that is the investees' key driving force. So even if it's a clean tech fund that is focused on climate adaptation, we're still going to look at DEI in that, and we're still going to have just as many questions in that as if it's a gender lens strategy. So wanting to make sure that that intersectional perspective from an SDG alignment is really deep on every impact investment. And I think that most impact investors are there now, but they certainly weren't even 3 years ago, had much more linear ways of thinking about impact. But that intersectionality is so incredibly important and an important thing that we need to all keep asking these questions about. So then we may have strategies for different investors that have different depth on from a DEI perspective, or different outcomes that they're looking for. And so we can build strategies that talk to those pieces. I think the biggest challenge in this space, and this talks to the work with HCF, and is around data collection. And so there are, from lots of different perspectives. And so Windmill has gone through our analysis, and so they've seen it from the other side of things. But there's the data collection is hard. A lot of folks don't know how to do it properly, how to do it legally, what the right questions are, how to do proper self-reported data, not organizationally reported data. And so there are barriers there to understanding that diversity in a deep way at the organizational level. And then there are power dynamics involved in what investors ask for. And so we're really thoughtful. The dominant model in the US is that impact investors put side letters into their investments that say what metrics they're going to collect, and they mandate those from their investees. We've really pushed back on that because it is a very patriarchal model of top-down capital allocation that says, I have the money, I have the power, I tell you what you're going to do, and you're going to answer it in this way. And so, but it's hard because that's not how we want to lead. That's not the way we want to come from, but the data is messy. And so how to be able to support enterprises and social enterprises and ventures to be able to know how to do that better, to have capacity to do that better, to understand how to integrate those results. And then for investors to understand them, that's complex. And so, we've put time and resource towards helping folks in our portfolio to do that better. But it's still really evolving. So there's still a lot of gaps in that understanding. And it's hard to sometimes tell if it's a data collection and understanding issue, or if it's what they're actually doing. So that's sort of how we go about it.
Wow, that's great. Kelly, I could listen to you talk about that just all day long. You're so knowledgeable about everything. What surprised you most about Windmill when you started looking into us, Nathan?
Well, I like this question. I think it's, I mean, there's for the people in the room, I mean, there's not many projects that I've worked on that in social finance that had the depth of impact and financial sturdiness or like stability and team that Windmill showcased. I think Windmill is definitely, in French, we say un phare, or like a lighthouse kind of project that can inspire a lot of others in terms of, you know, what tracks to follow or what some of the best practices. And definitely, you know, I've looked at, I don't know how many impact investing projects, maybe a dozen every month. And Windmill definitely stands out as one of the top 2 or 3 in terms of depth of impact and just solidity of the team and how much they put thought in terms of what tool they're building and why, and how social finance can leverage what they're currently doing. So that's definitely what I would say surprised me most.
Thank you. MJ?
So not a lot more to add, but I would say I remember one of the investors, you know, the due diligence process. We talked about, like, you know, I've worked for impact investors as well as traditional investors who bring me on to advise them on, you know, traditional venture capital, private equity, private debt investments. Windmill's presentation due diligence process was comparable or better to some of the best I've seen. And if you jump into the investor call, the same thing resonates. So for me, it was a reminder, you know, the point Claudia mentioned earlier about those 2 different worlds is sometimes, including for myself, there could be preconceived notions or biases that, okay, this is how for-profits operate and this is how non-profits operate and this and that. But I think we need to look at more of the fundamentals, you know, very fundamental approaches of evaluating an investment opportunity while doing our best to remove some of those lenses. And you know, that basically was, you know, phenomenal for the work I saw. And the other part I would say would be on the business model, and maybe from a relevance to the audience, is this was a model in which was very ready for investment. You know, you had a line of credit, which was a higher cost of capital. The replacement of that, and I'm not saying everything is going to be like that, and not every person can do, but that was such a great opportunity for investors to step in with more affordable capital, substitute that, it helped create more impact. So I would say those parts, you know, the team's robustness and rigor, the you know, the piece around the business model, and I would say, actually, I will say one last part is from an investor standpoint, and I want to repeat that, is continue to be the school of thought that 3.75% is not loss, is not 0%. It fits in a part of the investment portfolio. You do 4%, you do 7%, you do 12%. So as investors who are looking at these kind of things, impact, or other investors should start looking, you know, if there's an opportunity to do a fixed income that's a windmill that creates impact in the communities they live in, and, you know, you're not securitized, but you're securitized with the credibility of the people, you know, 98% repayment rate, then can we actually try to reimagine how some of that portfolio management looks like? I'm going to stop at that because I do get excited on fixed income and alternative fixed income, but I'm going to stop at that. Those would be my 3 comments.
Thank you. That segues well into the next question, which is around balancing financial and social returns. So for Annette and Kelly, what advice do you have for social purpose organizations on sort of balancing those financial and social returns within their own organizations? Annette?
Yeah, well, I mean, I can only speak it from an investor who's looking at investments, and certainly much like Nathan, I think we take the same stance that our first pass is always around mission alignment and how strong that is and how strong the case is and how mature the organization is in getting ready for that. I think that leads us to think, when we start to see the terms of the actual investment, as to where it might fit in the portfolio from MJ's perspective, that we don't treat them all, there's not a blanket kind of impact investment profile, because our impact investment profile is as broad as our market profile is. We need a number of different kind of levers in our portfolio at different investment return, risk rates, durations, liquidity. So you know, I think the compelling mission story and the compelling business model that works, we can then determine how to fit that in the portfolio when we're looking at those different blocks of assets that we need to kind of make ourselves sustainable. But it, for sure, in our case, it starts with when there's a very compelling mission, we inevitably seem to find a place that we can house it inside our investment portfolio.
I'll just add that, you know, there's a making sure that the audience is focused on the right part of this question. So you asked about financial and social returns as opposed to financial and social intention or outcomes. And so, you know, that's a really important difference. You know, without getting on the impact soapbox, I will say that on the intentionality side, there is absolutely no reason to not focus on social and impact intention, and to be thoughtful, not just as a mission-aligned investor, but as any investor, about the negative implications of where you likely are investing. So, you know, that's an important part on that side. When you then think about the actual return or the outcomes that are being generated for you, that balance is important, as Annette's talked about, but it's also varies quite a bit by asset class. And so, you know, and Claudia led off, and MJ's talked a little bit about the low return for Windmill. So that return is contextualized in the type of structure that is available to invest through the bond. If that return, and so for other folks, you know, perspective, if that same size return was put to an impact investor in you know, a VC or an equity vehicle, you'd have a very different reaction to what that balance is. And so it does really matter what the structure is, how the repayment comes, and what that looks like. I think the last piece around this is just around also around growth of opportunities. And, you know, this is within the context of investment readiness. We've seen through the IRP in the last 2 years, lots of really interesting ideas that are really nascent. And I think the biggest mistake that folks make is trying to jump. You look at Claudia's story from sort of day one to here, and trying to jump that 10-year span overnight. Right. And that's where that trade-off between financial and social returns, like that's where you'll lose investors in your story, is to say, you know, I can't go from here to here right away because it's not a credible pathway. So you need that credible pathway to bring folks along on both the financial and the social returns.
Thank you so much. Claudia, Kelly's given some great advice already, but do you have any advice for social purpose organizations who are looking to become investment ready? Please unmute yourself.
I don't know that I have anything to add to what has already been said. I think those are,
well, you could have stayed on mute then.
You're excellent points. And yeah, just don't, you know, walk before you run. And the things that I said in my presentation, you know, develop, really think through your communication pieces, how you're going to steward your investors, how you're going to maintain the credibility that you've sought to establish at the beginning, because you know, its community is still small and word of mouth goes a long way. And so you want to make sure that you can live up to the promises you're making at the beginning, and then all will go well for you.
This was such a great panel. I've got one more question for each of our investors to share. So final question, what is your advice for social purpose organizations who want to be considered investable by an organization such as yours? So let's start with Nathan.
I was hoping you would not start with me. This is perfect. I mean, you know, I think what we were talking about is also to take a step back and to realize social finance is trying to find its path between, you know, granting and traditional investment. And so what I've been seeing a lot is different groups or projects that will try to they'll try to copy a bit the needs of what mainstream finance is expecting. And so we've been talking a lot about due diligence today, and you know, the due diligence process comes from these decades of how the investment industry has been structured to perform and to act. And what is that due diligence based on? It's based on reducing risks and answering fiduciary duty. And those are, those are two of the main kind of drivers of what drives the due diligence process. And so they're filtering, it's a filtering mindset instead of a value add mindset. And so why I'm saying that is, as an investee, it's important to stay true to your story, to your identity, to your mission, and not necessarily just try to mold what you're trying to do to answer the needs of kind of a more mainstream, traditional investment industry. I think there's a lot that we can take from that industry, but we shouldn't shape ourselves to that. And both as investors and as, people carrying the projects in that field, I think there's a mutual responsibility to kind of build that up. And so for me, the advice would really be to kind of stay true to what you're trying to do. Social finance is only a tool. It's not an end in and of itself. It holds a lot of promise, but we have to remember that it's a tool to rehumanize and create more inclusive and collective prosperity. So just remind that it's a tool, and I think that would be my advice.
Thank you, Nathan. MJ?
Well, not sure what all I could add to it, but on the same lines, I think, sticking to the fundamentals of what, sticking true to who you are, Nathan, as you very rightly said, and sticking to the true fundamentals of your business mission, those aspects, and, noting that there's a lot of noise. Those who know me know I hate shiny objects because, I believe, put your head down and do the work. So is it meant, is it something that, makes sense in your context? I would say sticking fundamentals. Does an investment make sense? And I think right now is an opportunity to explore that. I know folks might explore IRP, Investment Readiness Program, just as an alternative grant tool. I wouldn't opine or judge on that. I understand why folks might do. I do not know if that's the best use of the capital, but I'm not the one designing. But what I would say is, on the lines of, okay, if you think that you're sticking to your fundamentals, it makes sense for you, then leveraging something like, the Investment Readiness Program funding that's coming in, or grant funding from some of the foundations that are doing, to try to work on a pilot. And on the lines of what Claudia said, walk before you run. So those would be my 3 things that, start with fundamentals, figure out that if, this actually makes sense beside all the noise, and then start small, leverage your grant or IRP kind of funding, and then go from there. So that's my take.
Thank you, Annette, and then Kelly.
Yeah, Nathan, I think your point is so well taken. I think, I think it's the essence of being successful in this space. And I do hold out hope that the space is evolving, and I don't take away from the need for financial returns and fiduciary responsibility. But, watching the evolution of the committee that works for us at the foundation on this work and our board, what I have seen is an evolution where they truly are looking at it in a 3-dimensional way that they weren't in the past, where, there's kind of risk return, throw liquidity over there, but risk return and impact. But impact was always kind of over here. But I can feel with time the integration of that. Like, I can feel that we're coming to a place, as we move down this road, we're going to come to a place, I really truly believe, where people will be able to mentally move away from the kind of static model we have in the financial world and bridge the world that we're trying to kind of create here, where impact really does count. Because I've had investments come in, in Windmill is a good example, where the story was so compelling, like whether it was 2.5% or 3.5%, we weren't going to get into a conversation about that. We needed to know that it was a stable organization, all the things everybody's already, said. But the impact was so compelling that I know our committee was thinking, we have to find a way to put this in this portfolio, right? And so I think we're, I have great hope that we're in this evolution of being able to look at impact as a value. We're working hard to try to figure out how we measure that exactly. But I do think there's a shift happening, and it holds out a lot of hope from my perspective.
I'll just add, don't give up, because you're going to get no's, and that's okay. And know that when you get a no, it is not a, this is a terrible idea, this is a terrible investment. It's not right for us right now. And whether that no comes from, Annette or, oh no, you've all frozen. Did I freeze? Sorry, you all froze. That must have been me. Whether that no comes from any one of our organizations, know that we take those incredibly seriously and incredibly to heart. And that take the feedback, ask questions, ask what didn't resonate, so that you can improve your story, your materials, whatever it is that was off. Because as the space does grow, and Annette's right, I am right there with her on hope and seeing transformation happen. But that means that we're going to have more diversity of actors, more diversity of investment thesis and things that folks are looking at for. And so not every opportunity is going to work for every investor, but don't be discouraged, because all of you out there that are starting businesses, doing innovative things, trying to solve these big hairy problems, we need you. We need you to be perseverant. We need you to press on, and we need you to give us the places to put the capital to help you solve the problems. So don't give up.
Annette? Oh, you're on mute.
Sorry. I want to add to that. Know the players who are interested in what you're trying to accomplish.
Yeah.
Like find them, like network as far as you
Find
can,
people.
figure out who is really interested in what you're specifically doing. Because it's amazing when you get like-minded people together, and it only takes one really strong person who says, I totally understand what you're doing. I want to help you do that. So I do think it's important to know the landscape for sure.
They do want us to move on to Q&A, but Claudia, I'll give you the last word.
Thank you. I'll be fast. Joel, just to pick up on one of Annette's previous points, and I would encourage all investees to fight against the advice that you need to offer a higher interest rate, because I got told so many times at the beginning, oh, you have to offer a higher interest rate to have people invest. And I'm like, well, it's not going to work financially for us to do that. But it was a big battle against a lot of people to keep it low, but that for Windmill was the right thing to do. So if you've got a strong social impact, I would say, find these amazing people around this room. Not every investor is as good as these guys, but find the right investors that believe in your mission. And it's better to have the right people on board at the right interest rate than it is to pay too much.
Great last words. Get the right investors, like all of these wonderful people right here. So now we're opened up for the Q&A. So if anyone wants to share a question in the chat or raise their hand, please do so. Yusuf, you have your hand up. Can you ask your question?
Can you hear me?
Yes, perfect.
Okay, perfect. So I am currently looking into different types of legal entities, and for a community impact initiative that I'm starting with other people. And part of my difficulty that I'm finding is the system that is in place currently, because I've worked with nonprofit and I've worked with government, and so I have experience in all these different places, and my experience with nonprofit, it's severely entrenched that it's grant, or they don't give you money for overhead, or you're living project to project. And I am looking for something that's actually going to be sustainable and resilient and robust over the long term. And through my research, one of the things that I found was in British Columbia and in Nova Scotia, so they call it benefit company in British Columbia, and in Nova Scotia, I believe the community interest company. And it's basically baked into the DNA legally that you're a social purpose business. So we're for instance, when you look at it in the sense of you
Sorry,
have
did you do your question?
So I just wanted to provide some context, and someone messaged me and it kind of threw me off. But my question is, like, within the scope of the investment readiness program, is it open to, you know, other legal types of entities that because for me, I don't want to do the nonprofit route because I see that as a systemic challenge, or you know, in terms of being sustainable. So, like, is there the freedom to set up for social impact outside the scope of like the traditional legal entities, like charities or foundations? Because I feel it's very limited in terms, and that's what I feel in terms of being able to achieve impact. That's that systemic issue of scaling up and creating that impact that we want is limiting us. I don't know if that makes sense, but like I'm opening it up like Pandora's box here. But
Does anyone on the panel, Annette or Nathan, you were sort of nodding along. Either of you want to take a stab at that question, answer?
The only thing I can say is that my understanding in the investment readiness program, and I'm sure somebody like Joe or Andrea could probably jump in here, is that you do not have to be a charity or not-for-profit to apply.
Yeah, that's
So
what
there is you can be a for-profit organization that's social purpose and apply to the IRP.
Yeah.
Yeah.
I'll just add quickly to that I'm looking at the email I got for Toronto Foundation. I am on the IRP evaluation committee, and it does say that charities, co-ops, not-for-profit, for-profit. So it's not limiting. Same what Annette said.
Yeah, and I think what's really important, and it's a good question, Youssef, and there is still that mindset that if you're getting let's say a foundation investing or supporting your initiative, you have to be a nonprofit or a registered charity, and that's really moving. I think today I wouldn't say that you need to be a nonprofit. We've invested in for-profit companies. We invest in funds that invest in for-profit companies, but there needs to be a clear link between, you know, what are your, it's really outcomes based. It's really, you know, what are you trying to do, and how are you creating incentives between your financial situation and your social outcomes? And I think that's really the key. I'm sure Kelly will say the same thing. That's what they do at rallies, and how we evaluate projects is looking at how are you linking the incentives together. You know, so the more you're going to create social outcomes, the more your business or your nonprofit is going to be, you know, in a good position to grow and to continue. So I think, you know, co-ops are also a great thing to look at. You know, here in Quebec, we have a great and very strong, flourishing social economy. I think they're often overlooked, and they hold a lot of promise in terms of, you know, getting already community buy-in and rooting a democratic process within their structure. So I think they're also there's a few great initiatives out there. So yeah.
So I think we'll just have time for one more question. So there's a question in the chat. Is there a negative impact on an investment prospect if an organization is paying off a loan? Is that seen as a negative to a potential investor? No, the answer is no. There you go.
I mean, no, within context. So if there is, you know, cash flow available to pay off that loan, if they're borrowing money to pay off other money and there's no impact being generated by that, then an investor might have a view on that. But if it's part of an overall financing round or part of achieving a step up in impact, then no, there's no sort of writ large problem with that.
And I believe I'm going to be in the breakout room 3 for Marco, and I'm happy to answer your question in the breakout room, Marco, if you want to join there. But I think Joe is going to introduce the breakout room details now. So thank you so much to our wonderful panel, and thank you to all of you who can stick around for the breakout room portion.
Well, thank you so much for a very insightful and informative discussion. I learned a lot, and it had a lot of a good practical insights. So thanks for sharing these investment journeys with us today. And also, thank you to all of the attendees for being part of this, being thinking through these opportunities. And now it's time, really, as a lot of the panelists said, so much of this is about relationship building and opportunities to connect and partner and to grow over the long term. Many of us have been in this world for many, many years, if not decades. And so there's a great opportunity to build those relationships.